Today I'm going to talk about a big problem that I see in the stock market, and I could see this problem affecting a certain few stocks that have been performing very well at the moment. But there is also going to be some good news, because I could actually see this problem for a few stocks being actually good news for some other stocks that you probably will own as well. So I'm going to kind of share my opinions on a few things that I'm seeing in the stock market right now. So I hope it's useful for you, and if you could smash the like button if you're new, subscribe. And yeah, it's not going to be about Chinese stocks. We've talked a lot about Chinese stocks the last few days, and yeah, this video isn't going to mention a single Chinese stocks apart from this point right now. They seem to be doing okay at the moment. Today they seem pretty strong, a bit of a recovery going in. I'm not going to speak too soon, but it's not bad. And in typical fashion, when the stocks are going up, we don't talk about them anymore. We only talk about bad stuff. We talk about the stocks that are going down on this channel, because those stocks are normally where the buying opportunities are. So with Chinese stocks actually having a pretty good day. I don't want to say it too much, but we're not going to talk about it today. Maybe we talk about them again, maybe tomorrow, maybe later in the week, but yeah, not too bad at all. But yeah, we're going to go through one of the big problems that I see in the stock market right now, and this could be a little bit of a game changer over the next coming 3, 6, 12 months. As always in the stock market, you generally don't know what's going to happen. You don't know where the money's going to move to. You don't know which stocks are going to go up, which stocks are going to go down. But this is something that I could see over the next coming few months being a bit of a change in the stock market. So we're going to take a look. So first of all, we're going to start off with some really big earnings that happened last night. I'm sure you probably know it was like the Game of Thrones finale for stocks last night. Like all the big dogs reporting. There's still a lot of big ones to come, but especially last night there was massive amounts of giant companies reporting earnings, and I'm sure you'll kind of keep an eye on a few of these. And one of them to start with was that I want to speak about just straight away is Microsoft. So Microsoft brought some earnings out, and if you look at the earnings, I mean, just look at that beat, and if you look at the revenue side of it, really impressive revenue. We go on the stock today, and yeah, the stock is flat. After such amazing good earnings, the stock isn't doing anything. But what does this stock have that's going on right now? If I just flick to the year to date, look at the stock chart on here. But like I say, amazing earnings, the stock does nothing. Another big company that reported earnings last night, and these earnings were very impressive. I actually saw these earnings and went, wow, these are good. Like, I didn't expect Apple to pull out. I thought these were going to be really harsh numbers to beat because of how strong sales were last year. But yeah, we'll have a look at Apple here. EPS, smashed the EPS, absolutely destroyed it. And then you look at the revenue once again, absolutely huge beat on revenue. These numbers are so impressive. These are generally like 10 out of 10 earnings from Apple, really good. Let's look on Apple stock. It's actually down today after these earnings. These stocks are, after them 10 out of 10 earnings, Apple stock is down today. Let's have a look again. What's going on in Apple stock? Let's just have a quick flick through. Yep, pretty strong. If we go on a 6-month chart, maybe not strong as Microsoft, but still, there's been a few points, maybe March time. It's still up a fair little bit at the moment. Once again, if we just flick to Google's earnings, Google's was the top performer in earnings last night. They were so impressive. Look here, 27 expected EPS, 27. They expected was 19, but they came out with 27. So impressive. And look at the revenue side of it. They came in with 61 billion compared to 56 billion. 5 billion beat. I mean, that's 5 billion beat. That's, you know, nearly bigger than a lot of the companies on the stock market. Absolutely huge beat. And if we just go to Google stock, I mean, it's, you know, these are, if I could say, 11 out of 10 earnings, and the stock's up, you know, after beating earnings huge man. Let's just go back on the EPS once again. You know, this EPS beat was nearly $8 beat, and the revenue was 5 billion beat. You know, these aren't 10 out of 10 earnings. 10 out of 10 earnings. These are like 11 out of 10 earnings. These are so good. And once again, the stock's only up 3%. We have a look at the stock. Once again, really good performing. We go to a 6-month chart that so far this year, what do you have here? A stock that has performed absolutely huge. It's up 50%. But once again, you know, they bring their earnings down, and yeah, we're up 3%. And the thing is you look at these sort of companies here, you know, any other company, Microsoft, bring those sort of earnings out, you're expecting probably a 5% jump on them. Apple, you're expecting probably a 5% jump off them sort of earnings, and we're down. Google, I think Google's earnings are nearly worthy of a 10% jump, and we're only up, you know, 3% here. But what do these stocks all have in common? Well, if we just flick across here to Microsoft's P ratio, Look at what they're trading at right now. They're trading at a 38p ratio, and I've just took it back here to 2017. Look at this. This is a one-time little charge here, so just ignore this here. This actually is not the correct p ratio. If you look here, 2020, slightly higher, 20, 25, 25, 30, 30. But low 30s, and then 38. This is a massive. This is the highest valuation that on a P ratio that Microsoft has ever traded at. And we go into Google. What does Google have in common compared to Microsoft? Once again, this jump is not correct here. This jump is because of a fine, so that's not correct. But if we look historically, what's Google done? 17, low 20s, a little bit of a 30 here. That's the peak. 34 is the peak here. 28, 28. 21, 23, 27. What's it at right now? 35. Once again, you have Google here at a historic high P ratio compared to what it normally does. As we looked previously, this company is normally a high 20 P ratio, and we're in the mid 30s. So once again, we have a company that is once again at the highest valuation it's ever been at. So what I have here is companies at all-time high stock prices. The valuations are sky high, higher than what they have ever been really on a lot of these companies. And then these companies come out and bring out absolutely amazing earnings out. But what happens with the share price? The share price is not moving. There's no buyers coming into these companies. No one's looking at Apple or Microsoft or Google right now. Maybe you could say some people are, but not what you would expect for earnings like that. A lot of people are looking at these companies now going, it's just too much. Even after them amazing earnings, people are looking at these companies and going, I don't fancy it. And that's a sign that we're running out of buyers. There's a lot of people that are looking at a lot of these big tech stocks right now, and they don't fancy buying these companies because they're looking at these valuations, they're looking at the run that they've been on, and even after amazing earnings, no one fancies buying them. And what kind of flip that the other way, if you had these earnings and let's say Google, Microsoft, Apple were at normal valuations or lower valuations than where they are right now, what would happen after these earnings? These companies would be probably jumping up 5-10% after a lot of these companies had reported their earnings. And it kind of shows you now we are kind of a bit of a slump. We are reaching a slump in the stock market for a lot of big tech. A lot of these big tech stocks have been performing very well in the share price, but we have kind of reached the point now where people are seeing a lot of these earnings and looking at the companies and going, yeah, it's great, but we've got no buyers. No one wants to come in and buying it. And that could be a slight change what goes on in the stock market in the next kind of 3, 6, 12 months. And this kind of goes back to another point here that I have. And if you look at the S&P 500 right now, funny enough, it's always good to check the weighting of the S&P 500 because even though you have 500 companies in here, it's actually very heavily based on a couple of companies. So actually, Apple, Amazon, Facebook, Microsoft and Google actually make up 20.7% of the S&P 500. Crazy, right? 500 companies, but actually 5 companies control 1/5 of the whole index. So obviously when these 5 companies do well, the whole index is going to perform very well. And if we look over the last 6 months of the S&P 500, it's been very good. If you held any tech stocks or most big tech or big market cap companies, what have them companies done in your portfolio? Facebook, Microsoft, Google, Shopify, they've all had a very good year. And if you're holding any companies in the S&P 500 right now, you're looking at your portfolio going, yeah, it's going really well. I'm really happy. Those are my best companies. Those are the companies that have been performing. And very much like the FTSE, you look at the FTSE, if you have any UK stocks, Greggs, S4 Capital, you're looking and thinking, yeah, these companies are really good. If you're holding these sort of companies, you're thinking, you know what, the stock market's been pretty good to me this year. My portfolio is doing really well. It's at all-time highs. I'm making a lot of money. What isn't doing well is the Russell 2000. And the Russell 2000 is your smallest 2,000 stocks in the Russell 3000. And you probably own at least some of these on the likes of maybe Tattooed Chef, maybe Corsair. I think Skills is in it now. DraftKings are in it now. A lot of the smaller market cap companies haven't done anything this year. You look at the S&P, look at the Russell 2000, look at it compared to the S&P 500, really good. Look at the FTSE, really good. You look at the Russell, it's flat on the year, and in fact, if you go back to the March time, you might even be down a bit. The small market cap companies are not performing, and if you have any of them in your portfolio, you will be noticing this. If you have any small market cap companies like the ones I just mentioned, you're probably flat on them positions, or you might even be slightly down on them positions. And some of these stocks in this little dip here, some of them have done okay. I think like Callaway's in here, and Callaway's had a pretty decent year, but there's some other stocks that are down like 30-40% from their all-time highs, and it's a mixed bag. A lot of these small market cap companies aren't performing. So if you look into your stock market portfolio and you have any small cap companies, they're probably the worst performing stocks in your portfolio. And the worst thing as well is if you've got no diversification in your portfolio, which you should always have diversification in your portfolio through different industries and also different market cap sizes of your companies. If you've just kind of planted yourself in all small market cap companies, you're probably looking at your stock market portfolio, and if you kind of started over the last kind of 6 months, you're probably looking at your stock market portfolio right now and going, I've done nothing. What's everyone on about? What do you mean the stock market's a good way to make money? What do you mean your portfolio is at all-time highs? You're probably looking at your portfolio right now. If you've only got small market cap companies going, my portfolio has done nothing this year. But the difference is if you've been in the S&P and the FTSE this year, you're probably thinking, I've got some good stocks. But like I say, if you kind of just sat in small market cap stocks, the last 6 months, your stock market portfolio has done absolutely nothing. And that's one big thing that's kind of gone on here, is that you've had a lot of these big market cap companies that have done very, very well and are at all-time high valuations, and a lot of these small market cap companies have done nothing. So this is what could happen, in my opinion, in the next kind of 3, 6, 12 months, across that sort of period, is that we are going to run out of buyers coming into the big tech. It's been on such a good run, and even though the earnings are absolutely fantastic, no one wants to buy big tech anymore. And what's going to happen? Big tech looks like it's not going to go up anymore, so we're probably going to flatline on big tech. Or what else could happen with big tech? If there's no more buyers and people want to start taking profit because they think, oh, it's not doing anything now, I'm up so much because of a really good year, I'm going to take my money out of big tech. So big tech, and you look at the valuations, could be in for a slight bit of a pullback and a slight bit of a correction. Now, what could that mean for the whole market in general? If big tech, the S&P 500 as well, if it has a bit of a correction, then in general that could mean the whole stock market kind of reverses from here. But the other argument is what could happen here, where if you are taking money out of companies that have done well, what are you going to do with that money? You're probably going to look for the best opportunities. Where's the best opportunities out right now? You're looking at probably the worst performing index so far this year, the Russell 2000. What's going on there? Well, you've got a lot of companies down there that have done nothing all year. You've got a lot of companies that are down 30-40%. And what could potentially happen in the next kind of 2, 3, 4, 5 months, a lot of these small market cap companies could actually pull out really good earnings. And if they pull out really good earnings like what the big tech is, what's going to happen? Well, compared to these guys are massively beaten down. If they start pulling out really good earnings, a lot of Wall Street are going to be looking and thinking, oh, I like a lot of these companies, these are good valuations, we'll go buy these. And a lot of what me and you that have bought a lot of these small market cap companies that are in the Russell, we know this. We know a lot of these companies, if you've held the likes of, Celsius, DraftKings, Skills, we know these companies have been a rough kind of 6 months and haven't really done anything. Whereas Wall Street kind of don't realise this because they've been looking at big tech all this time. And they look at a lot of these small market cap companies now and think, you know what? I don't want to put money in Microsoft because it's at all-time highs. The valuation's the highest it's ever been. What about that company down there? That company's beaten down. It's 30% of the value it is. It's just putting some good earnings. Maybe we rotate into there. And people are going to look for the worst performing sectors for the rotation and move the money into there. And that's what happens all the time in the stock market. It moves around the rotation, and you're looking at a lot of these big market cap stocks now, and you're thinking maybe it rotates out there, and they look for the next opportunity, which is in the small market caps at the moment. So I think we've got a big problem at the moment when you look at a lot of the S&P 500, a lot of big tech. There's a massive problem right now because these valuations, a lot of these companies are burnt out, there's no buyers. And that could be a problem for the stock market because in general, like I say, that could bring the whole stock market down. But another thing that might happen is if they take this money out of that area, where's it going to go? Where's the beaten down stocks at the moment? It's in the small market caps. So there's a big problem in the stock market because the stock market in general could have a bit of a slump right now. But where do I think the stock market's going to go? I could see a lot of this money rotating now from a lot of these big market cap companies into a lot of these beaten down small market cap companies, and that could be the change in the next 3, 6, 12 months. And we'll see how that one plays out, because I think that's where the opportunities are, and I think that's where Wall Street might kind of realize, okay, we'll go into them companies right now. So that's something to keep an eye on, and it's very, very similar to like what I've kind of been doing in the stock market. If I look right now, the likes of Facebook, Shopify, them, Amazon, Tesla. When did I last buy them companies? I haven't bought them companies since the start of the year. I've not bought them companies since the end of 2020. I've not bought any big tech, any big market cap companies for a very long time, nearly over half a year. What have I been buying, and what have you mostly seen people buying more recently? A lot of the small market cap companies, because that's where the opportunity is. And if the money is going to flow somewhere else, where's the opportunity is? We'll see. So I can see a massive problem coming here for the stock market in a lot of these big tech stocks, and it's going to be a good question now over the next few months to see, where is this money going to rotate to? Is it going to sit on the sideline of the stock market, or is it going to rotate into the small market cap companies? Because it is going to happen at some point, and I think that could be the change that happens. And this is what I'm saying, you don't know when it's going to happen. It could be 3 months, it could be 6 months, it could be 12 months, but I see this opportunity, this thing happening very soon in the stock market, and we'll see what happens. It's one thing to keep an eye out, especially as we enter earnings season. We'll see how these small market cap companies bring out earnings. We'll see how Wall Street reacts to it, if they buy a lot of it up. And definitely something to keep an eye on, and definitely where you want to keep your focus, in my opinion, and where most of my stocks that I'm buying at the moment is happening. So hope that video was useful, and you found something out there that was useful that you might take forward. And as always, smash the like button if you're new, subscribe, and I'll see you next video.